Hey everyone, welcome back to Corporate Decoder, the place where we dive into the nitty-gritty of corporate finance. And today we have something from Suburban Propane Partners LP, which let me tell you promises some interesting insights into how they are managing their propane business. So Suburban Propane Partner LP is reporting their full year and fourth quarter results for fiscal 2025. We're going to break down what these numbers mean for you and the company itself. Before we dig in, make sure you are subscribed for more of these straight to the point corporate breakdowns and join our Discord community linked in the description where we talk more about these filings. Alright, so this is a Form 8K, which is basically a report of major events that shareholders should know about. The main event here is the release of their financial results for the fiscal year ending in November 2025. The really juicy stuff in these K filings is usually the financial performance. Suburban Propane uses some terms that they want to clarify up front. They mention EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. Think of it as a measure of a company's operating performance before accounting for financing costs, taxes, or the wear and tear on its assets. They also talk about adjusted EBITDA, which means they're further tweaking that number to exclude things like gains or losses from market value changes in their financial contracts, and some other specific items. They do this because they believe these numbers give a clearer picture of their ongoing business operations to investors. Now, they also get into gross margins, which is a pretty straightforward concept. It is just what is left from sales after you've paid for the stuff you sold. But they highlight that because their cost of products sold doesn't include depreciation and amortization. Their reported gross margin is also a non-GAAP measure. They explain that for a business like theirs selling propane and other fuels, the difference between the selling price and the cost of the product is super important for profitability. So they focus on this to help us understand how commodity price swings impact their bottom line. The core of this filing is essentially a press release they put out on the 13th of November 2025. This release details their financial results for the entire fiscal year and the last quarter. While the filing itself doesn't contain the detailed financial tables, the press release attached as an exhibit does. We're going to focus on what those results imply. When we look at Suburban Propane Partners LP's performance for fiscal year 2025, and the fourth quarter as reported, they are emphasizing certain metrics. They're using EBITDA and adjusted EBITDA to give investors a lens to view their operational profitability, stripping out some of the financial and accounting noise. This is common practice for companies in capital-intensive industries or those with significant debt or non-cash expenses like depreciation. It helps analysts and investors compare performance across different periods or even against competitors who might use slightly different accounting methods. They very specifically point out that gross margin is a key indicator for them given the nature of their business, where the spread between the cost of fuel and the selling price is fundamental to making money. Their strategy appears to be communicating that despite any fluctuations due to market conditions or accounting treatments, the underlying operational performance driven by their ability to manage product costs and selling prices remains a central focus. This tells us they are keen on showing that their core business model is sound and that they're actively managing the factors that directly influence their profit on each unit of propane or fuel sold. It signals a focus on operational efficiency and market positioning in a competitive energy landscape. Now let's talk about what this all means. Suburban Propane operates in a sector that is very sensitive to the prices of commodities like propane and heating oil. When prices are high, their revenues might look good, but their costs also go up. When prices are low, their revenues might be lower, but their costs are also down. The gross margin focus is therefore critical because it shows their ability to maintain a profitable spread in their sales. The use of adjusted EBITDA suggests they might be experiencing or anticipating some market volatility related to derivatives or other hedging activities which they want to smooth out for reporting purposes. Ultimately, this filing, and especially the press release it references, are about communicating the company's financial health and operational story to the investment community. They are trying to paint a picture of a company that is diligently managing its business, even in potentially challenging market conditions. The emphasis on gross margin and adjusted EBITDA points to a management team that is focused on operational success and providing investors with metrics that they believe best represent the company's true earning power from its core operations. It is about showing resilience and a clear strategy for profitability in the propane and energy distribution sector. So what is the verdict, Suburban Propane Partners? LP seems to be navigating the energy market by placing a strong emphasis on operational profitability and managing various cost and revenue factors. Their reliance on adjusted EBITDA and gross margins suggests they aim to present a clear picture of their core business performance unaffected by external financial factors. This approach can be effective in demonstrating operational strength, but investors always need to look beyond these adjusted figures to understand the full financial picture, including debt levels and cash flow from operations, to get a complete view of the company's health and future prospects. Alright, that is our breakdown of Suburban Propane Partners LP's latest filing. What are your thoughts on their financial reporting strategy? Were these numbers what you expected? Let us know in the comments below. If you found this analysis helpful, give us a thumbs up and make sure to subscribe for more deep dives into corporate finance. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.